Hello, everyone. Welcome to another episode of Deal or Bust, where SaaS founders come to exit live. If you're just tuning in and this is your first time, I want to say hello. My name is Nathan Latka. You know, these shows are a ton of fun. The founders come on. We're going to meet them in a second. You're going to see their financials. You just saw a preview of. The buyers are going to come on. They're hungry for a deal, especially in an environment where people are so flush with cash. But ultimately, they've got to get to a price point that both the founder and the buyers like. So the way that this will work is we're going to meet the founder here in a second. This tool is a special tool. It's a tool in the B2B SaaS social media management sort of space and tracking space. The founder is a ton of fun. The metrics look pretty darn good in terms of how they've been growing over time, churn, and different revenue inputs. So we're going to get into all of it live. But first, I want to make sure you guys can all hear and see clearly. I see Aaron Watson in the comments. Aaron, what's up? Guys, if you're just joining, go ahead right now. Leave a comment over there because this is really cool. Watch this. If you engage in the comments, I can add you to the screen. So there's Aaron. Aaron, what's up, brother? Good to see you, man, with Piper Creative up there in Pittsburgh. Who else? We've got Zabi joining. Zabi, how are you, man? Good to see you. Darwin's here. Again, if you're just joining, let us know that you can see us clearly and hear us. Jamie, good to see you. Hello. Darko, good to see you. Guys, let me know real quick where you're joining from and if you're an investor, a founder, or you're just curious. Investor, founder, or just curious. Again, those of you just tuning in, you're watching Deal or Bust. If you're watching the replay, be sure to don't miss next week's episode. Make sure you sign up to get that notification by going to nathanlatka.com/next week. Right now. Here's a quick hint at the metrics from the founder today. These are top line revenue metrics, MRR, annual renewals, and other. We'll meet the founder here in a second. Again, you guys are watching Deal or Bust. We've got Ebenezer joining from, he did not say where from, but Ebenezer is joining. Lynn says, just curious. John, good to see you, man, a founder from Montreal. Very cool. Well, guys, we're not going to bury the lead here. We're going to jump right in. If you guys are watching on Twitter, you can also retweet the Periscope live feed on Twitter. We're engaging there as well. We see all the comments from Facebook, Twitter, Twitch, LinkedIn, YouTube. They're all coming in here. I can see them live. So I see Follow Soft, Pat. Pat says, I'm a founder and a wannabe investor. I love that. I love that. This is the show for you. You're going to see a live negotiation and how a founder has built a business up to about 300 grand in annual sales. We'll have a lot of fun. Ebenezer is joining from Ghana. Ebenezer, good to see you, man. All right, let's not bury the lead, guys. I want to kick things off and tease you slightly by introducing our buyers, right? So here is who we have on today. We've got three folks. I think you'll know Akil Jabber. He's been on the show before, running Horizon Capital. 12 companies acquired. Last deal was Longtail Pro, looking to deploy 20 million bucks in capital over the next year or so. He's done doing 3 to 4 deals per year. We've got Neil Patel, who is the ultimate operator, co-founder of Crazy Egg, Kissmetrics, and Hello Bar, along with today Uber Suggest, which I hear is growing like crazy. He helps companies like Amazon, NBC, and others grow their revenue. Also host of the Marketing School podcast with Eric Sue. And lastly, we've got Andrew Gazdecki. He's the founder and CEO of Business Apps, which was acquired in 2018 by a private equity firm for a lot of money. We can't say the price, but he's smiling in the back room, so it was a lot of money. That's how that's how that works. Made all the ink stuff, had a great run there. And then we also have experts joining today. Wes Bush is the product-led growth guy. He created Product-Led Institute. We'll hear from him. He's going to give advice to the founder, along with Peter Loving, creator of the Facebook group SaaS Founders and UI UX Expert. But all this would not be possible without you guys engaging. You're going to meet the founder here in about 37 seconds, and I will watch your comments. You have questions about the business. If you're curious about how the show works, anything like that, you can put it right there in the comments. I will put it on the screen. We'll ask the founder. And most importantly, guys, we're going to learn a lot together and have a lot of fun. All right. So let's go ahead and meet the founder, who is Mr. Javier. The company is called TweetBinder. Javier, welcome to Deal or Bust.
Hello. How are you, Nathan?
I am well. So this is the first time the buyers are seeing the company on the screen. Same with the audience. You can go to tweetbinder.com to check it out. Wow, Javier, tell us what the company does and what's the revenue model.
Well, what we do, we are a freemium SaaS company. What we do is like help companies to understand what the hell is going on their Twitter. We analyze hashtags, handles, whatever is on Twitter right now.
That's great. And help us understand growth. When did you launch the company? What year?
2013. And that was a hell of a year. That was the worst year of my life. Then in 2014, we started the revenue, and from there we have been growing constantly.
And let's not bury the lead here. In 2019, how much revenue did you do?
2019, it was like in dollars, $388,000.
There you go. So we got it right here on the screen. Look at that. Good preparation goes a long way. $388,000 in revenue in 2019. And we're going to want to make some critical distinctions here when we meet the buyers, because you have different ways that you make money. But those of you in the audience, what do you think about the company? Have you gone to tweetbinder.com to check it out? Let me know what you guys think in the comments about the company. So Javier, you launched the company. I'm going to go through now sort of the slides that we've looked at in terms of the product experience, right? So this is essentially a hashtag tool. Walk us through what we're looking at right now. Is this your UI?
Sorry?
Walk us through the UI. We're looking at it right now on the screen. Your drag and drop tool for creating hashtag dashboards.
Yeah, well, basically our UI is very simple. We have a big search box. People insert their hashtag, and then they have a report automatically. We are a very simple tool, and it's very important for us that you have the report in just 10 seconds, 15 seconds. We can analyze historical in real time, whatever, and it's free. Everyone watching now can try it.
Okay, so we're going to the next screen here. Walk us through what we're looking at right now. This is Bryan Adams GitHub. What is this?
This is one of the coolest things in the world. This is a tool used by Bryan Adams during the tour 2 years ago. It's a platform entirely built on our API. So Bryan Adams was getting all the pictures from Twitter, from their concerts, and automatically he was uploading those pictures in this platform. And everything built on our API, built in less than a week.
And you have a lot of customers. We're sharing here quotes from Mindy, Matthias, and Yak. Are you mostly an enterprise play, or is this more like an SMB mid-market sale?
Actually, we have hundreds or so of clients. So we have like very big clients, like very big, like Google, like very big clients. And then we have very small clients as well, like you, for example, or me, for example, like individual, like a single community manager can buy an $8 report.
Great. So guys, it's tweetbinder.com. Let's go ahead now and meet our buyers. So first up, we've got Akil Jabber with Horizon Capital. Akil, welcome to Deal or Bust.
Hey, thanks for having me, Nathan.
You bet. So tell us real quick, what kinds of companies are you looking to buy and how much capital do you have to work with?
Yeah, so we're looking for B2B SaaS companies. This fits perfectly in our portfolio. We like marketing tech like this. Generally, we're looking for companies doing about 500K in ARR, which I think you guys are close to if you guys look at the numbers you've done so far in 2020. So I'm liking this deal so far.
That's great. All right, and let's meet our second buyer, Neil Patel. Neil, welcome to Deal or Bust.
Hey, thanks for having me.
All right, so talk to me a little bit. You know, you're a little bit different. You don't advertise yourself like you're out there buying companies, but I know you're the ultimate opportunist and you're a great operator of SaaS companies. What sorts of deals are you looking at right now?
We're looking at companies with a lot of traffic. So the key for us more than anything is not revenue, it's how many visitors do they have.
And what's a good amount of visitors you like where it starts to get you interested?
500,000 a month on the low end, 1 to 2 on the high end.
And in this Tweetbinder case, could you count all the dashboards his companies are launching through his platform and via the API, or only traffic that he owns on his own website?
I would look at the traffic he has on his website.
Very good. All right, let's meet our last buyer, Andrew Gazdecki. Andrew, welcome to Deal or Bust.
What's going on, Nathan? Good to be here again. Hey, what's up, Neil, too? I interviewed with your team for the CEO job at Hello Bar, but I was CEO at another company. But good to see you on here, dude.
Well, thanks.
So, Andrew, Neil turned you down. Is that what you're saying?
Well, probably, but I was running another company, and then that was acquired. But yeah, we were in San Diego. I've always been a fan, so good to see you, dude.
Guys, if you don't know Andrew, he built business apps up to north of 10 million bucks in ARR, sold it in 2018 for a lot of money, is now looking for a company to acquire to actually jump in and run. And actually, a little preview here, Andrew and Akil have actually both looked at this deal. There's definitely interest. This is Neil's first time seeing it. Akil did not know that Tweetbinder was going to be live today. So this is all sort of happening organically and live. Those of you just tuning in, you're watching Deal or Bust, the show on YouTube where SaaS founders come to sell their companies live. We're 10 minutes in. We've just seen the company. It's tweetbinder.com. Over the next 10 to 15 minutes, the buyers who we just met, it's their chance to ask Javier any product questions they have. And then at the end, we'll wrap up with some revenue questions before meeting the experts while the buyers think about offers they might want to make. And then they'll come back on at the end of the show, make offers, and have a live negotiation. So with that, I'm going to pass it over to the buyers. Akil, let's kick off with you. What product questions do you have for Javier?
So in terms of your Twitter dependency, what's kind of the risk there with Twitter and then their API on the development side? Is there? I know that there's a big risk with Facebook and Instagram. Is there something similar on the Twitter side?
I don't see it actually, because we are a very good client of Twitter. We are paying Twitter every month to access their API. We are not the biggest client, but we are one of their source of revenue. So I don't think they cut that part.
Great. Let's go to Andrew. Product question?
More or less, I'd be wondering, in terms of your highest paying customers, Javier, how did you find those customers? And then second question would be, what are you spending on sales and marketing today?
Well, we don't spend on sales or marketing. We have grown organically. By the way, thanks to some blog posts from Neil. Thank you for that, seriously. And about high-paying customer, we have some clients paying us like a lot, and they just come to the platform and they contact us for a big plan or a big subscription, or they just bought it online like an annual subscription. Basically, we should go out there to find them, but they find us.
Javier, what's the biggest customer, the largest customer pay you per year, per month?
We have a customer paying us 4,000 euros. It will be around $4,500 per month to access our API. We just got it like 2 months ago.
Okay. Neil, let's go to you. Do you I know you write about a lot of different companies. Do you remember writing? I guess you wrote about Tweetbinder somewhere.
Yeah. Do you guys have, do you guys just do Twitter, or you do more than Twitter now?
Right now, we do just Twitter, but we are ready. If TikTok, for example, and this is a very good question because we get this question every day. If TikTok opens their API today, for example, in 1 month, we are ready to just plug it in our feed. In 1 month, we have TikTok reports. So we are in a very
What
good
about
position.
Instagram or some of the other players that already have hashtags? Right?
We used to have like Instagram reports, but now they closed their API, and the rumors are they are going to open it again very soon. So we will be there. I mean, we are just, if they open their API, we have Instagram reports in 2 days because we have the structure built for that. But Instagram, I mean, if you wish, if I have a wish, it will be that Instagram opens their API again.
Neil, is that a big issue for you, the fact that they're really only focused on Twitter right now?
It is a big issue because if you're only focused on Twitter, you've already gotten cut off by Instagram. There's no guarantee that Twitter's going to keep it. Yes, they're generating revenue from you, but it's a very small portion of their income versus ads.
Mm-hmm. Is your model usually, sorry, when you say ads, you mean Twitter making money off the API calls versus their ad revenue?
Correct.
Yeah, interesting. Javier, how would you respond to that?
Well, since we launched this company in 2013, that's the question we get like asked all the time. It's a legit question, and that's something that can happen. I don't think that can happen, but that's a risk. I mean, I don't rule Twitter, and that's something that can happen. But if, but on the other way around, if there is a new source of information like Twitter out there, like Mastodon, for example, and it's bigger than Twitter, we will leave Twitter and we will go there as well. So there's risk, of course, and I cannot guarantee that Twitter is going to be around, but I've been answering these questions in 2013.
Yep. Akil, let's bump back to you. You know, he's got multiple sources of revenue. Is the pricing model here on the screen clear to you? Do you understand how he makes money today?
Not really. I guess I'm trying to understand how you came up with that pricing model and how would you improve it, because it's a big range, right? From basic, medium, advanced, premium. Yeah, I'm just trying to understand that a little better there. From 40 to 800.
Yeah, well, that's depending on the number of reports that you want to create. For example, if you are a big agency that you have many clients with many hashtags, many campaigns, you will go for the premium one. If you want to analyze historically or in real time, and you are going to consume a lot of tweets, we pay Twitter per tweet. So you go to the premium. If you're a small company and you want just to analyze hashtags in the last week, then you go for the basic report. Actually, that basic report used to cost more. We reduced the price to 40 euros or $40, and right now we are selling like crazy that monthly plan.
What is selling like crazy, Javier? How many new customers are you adding per month?
This month is 27 new customers. Basic subscriptions will be like, I don't know, like maybe 19.
Mm-hmm. Neil, going back to you real quick, you said you really care mostly about traffic. I mean, so does any amount of revenue growth even matter to you at all? Or are you really looking at undervalued assets that haven't turned on revenue at all yet? And that's where you come in and really optimize.
I'm looking for big TAMs, tons of traffic, under monetized. I can go and fix it and scale it.
Yeah, so you almost prefer to find a free tool because then they're not trying to back you into a revenue multiple to pay.
If I was to buy Tweetbinder, I would try to figure out how to add all the other networks, crush all the paid models, figure out better ways to monetize.
Mm-hmm. Interesting. Is that the approach you're taking with Ubersuggest?
Correct.
Yep. All right. Very good. Well, guys, we're going to loop back here to the experts, Wes Bush and Peter, here in a second. But first, I want to make sure I give the potential buyers any chance to ask additional product questions, right? So let's go back to Akil real quick. So Akil, any follow-up questions on the pricing model?
Are anybody actually paying that $70 per month? Are they signing up directly on your website, or does that take a call and a salesperson to close that deal, like their enterprise deals?
No, like 100% of the new sales this month, for example, came through the website in subscriptions. In reports, small reports, of course, we sell like 240 something reports per month, and the subscriptions as well. They don't call us for that.
Got it.
So break down for us real quick. So we have all these revenue line items for you, Javier. When you say so last year you did $388,000 in sales. What does online sales mean?
Online sales is basically one person going to the website. They create a report and they upgrade the report, because we have a free version only with 500 tweets per report. They want more tweets because the hashtag is very busy, and then they upgrade the report, or they buy a historical report because they want to cover more. That's online sales, basically. Sales made through the website. And
it's one time?
Not really. I mean, many people buy more than one report. I will tell you that. More than one people. Today, for example, there was one person buying 3 historical reports. I saw it in the dashboard later. So people repeat. If they need more reports, they purchase a plan for that.
Andrew, this isn't true recurring revenue, at least this line item. Now, it is sort of usage-based or metered based off number, how many reports they download. But how do you value this sort of revenue stream when it's really not truly SaaS?
Well, you can't give it like a typical SaaS multiple on it, but the way I'm kind of viewing this is future growth potential. So the next question I'd have for Javier is, can you white label this product? You say you sell to a lot of agencies. Is that an opportunity? Have you explored that? Have you thought about that?
Yeah, for sure. With our API, if you want to sell, for example, to a big consulting like a company like PwC or whatever, and they want to have their own platform, I can deliver that tomorrow. It's super easy. Actually, the plan that we have right now that they are paying $4,000 per month, they build their own platform to use it internally, but on our API.
To build on that too, so these high-paying customers, you don't have a sales team, correct? So these people just came to you, and now they're paying you $4,000, $5,000, $6,000 a month.
Yeah, and what I have to say here is like, we don't do marketing because we don't exactly know how. We do a little bit of SEO, but we are a 6-people team, and we don't know how to grow, basically. That's our problem right now. We don't know how
so no marketing spend. You have some high-paying customers that just randomly came to you. This is interesting.
Thank you.
Andrew, why do you say it's interesting? If he doesn't know how the customers came to him and how they closed him, how is it a repeatable process?
Well, I think the way I'm viewing this is, how do we 10X it? I'm not viewing this business as, what is it today? I'm thinking, you got these high-paying customers. How do we go out and get, 30, 40, 50 more of them? If you have a few of them, it's just rinse and repeat. And so easier said than done, but that's kind of where my head's at right now.
Yeah, very good. Before we go to the experts, I want to go to each of the buyers. What we're going to do is when we bring the experts on, they're going to sort of give some advice to Javier, both on product from Wes and UI UX from Peter. The buyers will have that time to sort of think through the financials they've just seen on the screen. I do want to give you a chance, Javier, to sort of walk through, and Andrew and Arkeel, let me maybe ask you guys this. Is tech stack important to you guys or no?
For me, not right now, no.
Okay. Andrew, do you care?
I definitely care. I probably need some help from Javier, but yes, no.
Neil, does Heroku turn you on?
It doesn't matter what they use.
Fair enough. All right, cool. So technical architecture, not a big deal. If we do have developers watching, though, this is what the background looks like. Let's talk quickly about people. So Javier, you've got 3 people here. If someone buys the company, do you guys stay with the company or do you want to leave?
Sorry, this presentation is not with our data, actually. I'm sorry. This is not the last version of our. These people are not Tweetbinder. I'm sorry.
Okay, no problem. Who are these people?
I think it's the template I used to do it. So I'm very sorry for that. And this technology is not the technology we are using as well. I'm so sorry.
Oh, well, that's the beauty of a live show. Wrong information. I apologize for that. Are these revenue numbers accurate?
Yeah, totally.
Okay, great. So let me ask, because I want to get a yes or no from the buyers if they're interested in continuing or not. Neil obviously cares a lot about traffic. We've already sort of touched on that. This is what the traffic looks like today. So just clarify this. How many unique views did you get last month?
It's around 100,000. And about Neil, what I would like to point here is like right now we have like 100,000 visits per month. Last year in the same month we got 30,000. We grow 70,000 in 1 year. And if you want to grow more visits in Tweetbinder, and that's a very easy way to do it, and not because not only SEO is to raise the limit of the free version of Tweetbinder. In the past, it used to be 2,000 tweets per report. Right now, it's 500. A lot of people they reach the limit of 500, and they say, "I'm not coming back." We are selling more, but we are getting less reports. We do around 35,000 reports per month. So if you want more traffic, then which will raise the limit of 500 tweets per report.
Neil, your time is really the most valuable asset you have. You're looking at a lot of opportunities, right? When you look at an opportunity like this, is there enough here to get you interested, or is it too small and you're out?
It's too small, I'm out. I still think this is a good business for you. It's just too small of a TAM for me and too small on the traffic end as well. But I do wish you the best of luck.
Neil, thanks for coming on, man. All right, let's go to Akil. Akil, same to you. So we're going to bring the experts on real quick. You're going to have 10 minutes to sort of think through, do you want to make an offer, et cetera, while we bring the experts on. Are you interested in this deal? And do you have any last questions for Javier before we bring on the experts?
Sure, yeah, I'm pretty interested in this. Follow-on question, freemium users, how many free users would you say you're getting per month? And what's your conversion rate to paid if you have that percentage amount?
Conversion rate is very low. Is below 1%, like 0 point something percent, and we have like 10,000 logins, like using the platform every month. 10,000 people using the platform.
New logins or previous logins or combined?
All logins, like all logins. New logins, we have like people come and go, but we have around 2,000 new logins every month.
Can I just add one follow-up on that? What is your churn on your MRR percentage? And then what's your LTV average, say, on that recurring revenue piece?
Yeah, our churn is very high. What I want to say is, like, if somebody wants to buy Tweetbinder, we need somebody that actually can take care of the growth and know how to retain users. Right now, we have 19% churn in Tweetbinder right now. The lifetime value of a customer is between 300 euros to 900 euros. Okay, more or less, that's the lifetime value of a user. But the reason we have a high churn is mostly our fault. It's not because of the product. The product is good. The product is one of the best in the market, and this is not because it's my product.
Here,
But
real quick before you continue, when you say 19% churn, are you talking revenue churn monthly or is that annual churn?
a monthly churn in like clients that cancel the subscription.
Okay, got it. Yeah, so obviously that means if you take that every month, you're churning like through 240% of your base. I mean, you basically have to replace yourself twice every year to just stay flat. Is that accurate?
Yeah. I mean, the churn is high. It's high.
Okay, great. Okay, so go ahead and continue. Did you want to add something on there? Javier, did you want to add something on?
Yeah, that we are not taking good care of our clients, to be honest. Like we there are so many things that we can do with them, and we are not doing. Like we are like just 6 people in the team, and we can take care of the clients much better. And that's something that we are going to do in the future. And that's something that if we do and we explain the platform very well, they will stay for sure.
Let's just quickly clarify these. Then we're going to go to Andrew, and then we're going to go to the experts. The numbers you see on the screen, people are asking in the comments. So we know what online sales are. There are people buying the one-time reports. You sold a total of $118,000 in these one-time reports last year, correct?
Correct.
MRR, that is not actual, like that's not 93,000 hitting the bank every single month. That is if you add up all of these subscription plans paying on a monthly basis from 2019, you did a total of 93,000 in sales, correct?
That's correct.
And annual renewals is the same thing, but if they paid all up front one time, you did about $67,000 in revenue last year on that, correct?
That's correct.
So if someone wanted to back into an actual MRR, what they would do is to take this MRR line, divide by 12, right? And then also take the annual renewals and divide that by 12, correct? So you're doing between $10,000 and $15,000 per month right now on a true recurring basis.
Well, right now it's higher. Is higher in 2020 is higher than that. Right now we hit 15,000 euros per month. Right now, this month is 15,000 euros.
Got it. And through June, as you guys can see here on the screen, he's made almost 60,000 US dollars in terms of MRR over the first, 5 months, 6 months, January, February, March, April, May. 6 months of the year. He has 40,000 in annual renewals. And that was just halfway through June. So already right there, that's 100,000, right? So people can sort of back into that. That's where you get 15, 16, 17,000 per month over 6 months, right?
Yeah. Actually, since we got this new big client in June, I think, I don't know if that's counted in the MRR, but
okay.
The MRR next month in August is going to be around 15,000 euros.
Okay, and let's round this out. There's another $108,000 of other revenue last year. What is that other revenue?
That's basically people that want like big things, like mostly universities, to be honest. They want like, okay, I want like 15 historical reports containing this, and then they approach us directly. The other also is like our software for events. We have a display software for events, and right now during COVID-19 is doing nothing in revenue, but in last year, like it gave us decent revenue. Now we're rebranding it, but basically it's people approaching us because they either the website is not clear enough or they want something special.
All right, Andrew, before we go to the experts and let you and Akil time to think, are you interested in this product? And if you're still on the edge, what question do you have?
Yeah, I'm definitely interested. Javier, we've spoken in the past. I think you're sitting on a gold mine of data, but my question would be around, do you know who you're selling to? Do you have your ideal customer profile defined by like role, title, company size? Have you thought of the business like that? Or are you just serving everyone, and that could be maybe the source of your churn problem potentially?
It can be. Right now, our clients, like the ideal buyer persona is agencies, marketing agencies. They need this tool. They need a tool like this. If not Bitbinder, other tool. So that's the ideal. And
then one follow-on question too. So the customers that are paying, thousands of dollars a month, did they start on a free plan? Did they kind of upgrade? Did they go through, the pathway up, or how did that start? Did they start at 6,000 or did they start free?
Actually, everyone starts free because the tool is free. This client, actually, they bought some reports back in November, and then they require more things, so we sold them the API. But they were clients in November, and they came back in March, April.
And then just last question there, do you have this product, this API product listed on your website anywhere? Have you productized it? And you have no sales team and you have no marketing team?
No, and actually we don't have a proper documentation yet. It was kind
Those
of
are all good things. Those are my questions.
yeah.
All right, very good. Akil, Andrew, do your thing. Take some quiet time for the next 10 minutes while the experts chime in. Think about what you might want to offer. We'll hear from you in about 10 minutes, all right? All right, thanks, guys. Cool. So, Javier, this is good stuff. We're about to hear from Wes, who really, I mean, he's the PLG guy, the product-led growth guy. There's a lot of opportunity, it sounds like, from people in the comments saying, wow, this product could use some love. I think you'd agree. If you're just tuning into the show, you are watching Deal or Bust, where SaaS founders come to sell their company. Make sure you don't miss next week's episode at nathanlatka.com/YouTube. YouTube subscribe. You can also just click the subscribe button below. Additionally, when we bring the buyers back on, we will talk about profits, but we've got to make sure that you guys are loving this thing. We want to know, should we do it again? Are you enjoying it? If you're loving the show and enjoying it, give Javier some love real quick. Root him on. Javier, you're taking some blows. Neil hit your traffic pretty hard, but that's Neil, right? He's like traffic god. He's like, revenue. Who needs revenue? I just want traffic. But that's Neil. So guys, give Javi some love. Click the like, click the love button, whichever platform you're watching on. And if we get 50 thumbs up, we'll be sure to do this again. While you're doing that, let's bring on author of Product-Led Growth, Mr. Wes Bush. Wes, welcome to Deal or Bust.
Awesome. Thanks for having me.
You bet. So tell us real quick, for someone that has not met you, why are you the expert on product-led growth? What have you done? Give us some credibility here.
Yeah. So whenever it comes to product-led growth and why I'm passionate about this, I am the expert at understanding what you promise with your messaging and actually delivering on it in your product. So that is the journey that I map out for people, clients from small people to Fortune 500 companies. And I get people to see value quick.
So what opportunities do you see? I'm going to let you two go back and forth here for 2 or 3 minutes. You had the chance while the buyers were talking to sort of look at tweetbinder.com. What opportunities do you see with Javier's product?
Yeah. So want to go to the homepage first? Perfect. So when you're on the homepage, one of the first things I thought of is, oh my goodness, this is quite overwhelming. There's a lot of things going on here, whether it's just the messaging with the white text with the blue background. That's really hard to see. And so I wasn't easily able to see, okay, what is this for? And then at the bottom of the subtitle below the main header, it says an event. And so I didn't quite get what this product was all about. I thought it was more about just getting a report, but there's this event component as we were going through the other slide decks on this. And I was like, oh my goodness, there's so much more to this product than just what I initially saw. And so there's a lot of things, at least from the messaging, that I thought could be improved. But one good thing I will give you, and I can see this backed up by the stats, is right now you mentioned you had about 100,000 users on your website every single month, which is awesome. But 35,000 people are filling out their report every single month. So is your conversion rate like a third that you're seeing?
Yeah, we have a blog that is driving. That's a very good question, because we have a blog with a lot of traffic. It's getting a lot of traffic, and we try to get those people to create a report, but then only a few they do. Maybe because you have to log in. I don't know, but that's very good observation, actually.
Yeah, because that's a really great conversion rate. I think that's something that's really strong that's going for you, even with the copy and even just some of the design elements. I feel like you could even boost that up with some simple tweaks quite easily. Now, when you get into the product, I feel like that is your biggest, lowest hanging piece of fruit right now. So ahead of this, I did go into the product to fill out the first report. And when I did, for those who are going through that experience themselves, it's pretty straightforward. You only just have to authorize Twitter, then you can get in there and see what it's all about. But it's really the whole focus, it felt like, for me at least, was on just getting me to upgrade. It wasn't really showing me the value of the report. And I was left kind of feeling I don't quite get the value here. And so whenever that's the case, that really just means that your free version might not be as powerful as you need it to be to really get people over that edge of understanding what is the full value here and how can I take advantage of it and have a good reason to upgrade. And so whenever I saw 35,000 signups going through, filling out their report, and only 27 customers, like you have a huge volume of people. It's really just that free to pay that I want to see you improve. And what have you tried so far to improve it?
Good question. Right now, what we are launching in August, a new version of Tweetbinder is going to be great, and we have a very limited time for users. What we want to do is like to show the value of Tweetbinder just in seconds. Then the new design has things that explain a little bit the value of Tweetbinder. But these things you're saying, Wes, is actually a little bit embarrassing, but it's true.
Yeah, and I feel like that just comes down to focusing on more of the messaging, get people to see, okay, understand the value before they get into it, and then let them know a little bit more about what they can get value out of it. Because whenever I filter it, you get demographic information, you get a lot of stuff, but I wasn't completely wowed. And so every time I wanted to dig deeper, it said pro. You need to upgrade to pro. And I would love to see, at least for that first report, some more pro features to just get a feel for what I can actually see. And then if I want to do more reports, that's when you can say, hey, maybe the first free report, completely all access, and then you get me to upgrade. You get me excited. I want to see this again. And then it makes a ton more sense to upgrade.
Wes, real quick before we have you hop off, one of the things that SaaS founders, and Javier he's probably testing this like crazy, but he has limited time, is figuring out where to put that paywall. You know, he has an avalanche top of funnel, but the question is, where do you put the pop-up? Do you restrict features on the first report? Do you give the full report? I mean, do you strip naked and give it all away for free once, but then they have to pay for the second, third, fourth? How should people and founders go about deciding where to put the paywall to maximize conversion rate?
So this is always going to be something you should always be testing, which is like the worst kind of answer you want. But whenever it comes down to it, in this particular case, when I filled out the report, I didn't feel like I completely got the value. If I wanted to see something new that I probably didn't know, I would have to go and pay for the pro version, which is a big ask. And so at least for my recommendation, what I would encourage you to think about and do potentially is give that first version away with all of those pro features, or at least the majority of them, so people can see, hey, this is what I'm going to get access to. And then if they want more, then they can obviously pay for it and they know what they're going to buy. And trust me, like right now with this current pandemic and everything, people are more risk averse. And so whenever they can see what they're going to get before they buy, you build confidence. They're going to want to experience that value again and again if you show them in the first place. So I just wanted to share that with you, but I hope you found that advice helpful.
And Wes, what do you think he's doing really well right now before we wrap up?
That conversion rate. 35% of people who go on this website end up filling out a report. Even with the copy, the design being like it is, I think that's incredible. And you very rarely will see that in the B2B space. But I know you're kind of bridging the gap. I'm sure some people are B2B, some people are B2C in this case. But that's an incredible conversion rate.
Guys, very good. Guys, you're listening to Wes Bush. If you're just tuning in, you're watching Deal or Bust, where SaaS founders come to sell their company. We've got Tweetbinder.com. They did over $300,000 last year in revenue. We've got 3 buyers on the show. One of them dropped out because he didn't like the amount of traffic. He wants to buy companies with way more traffic and then monetize. That was Neil Patel. But we've got 2 buyers, Andrew and Akil, that are interested. They're going to make an offer here in about 5 to 7 minutes. But first, we want to hear from Peter Loving. As we wrap up here with Wes Bush, Wes, if people want to learn more from you, where can they go?
Just head on to productled.com. That's it.
Productled.com. Wes Bush, thank you.
Thank you.
All right. Thank you. Bye.
All right. Let's bring on now, Javier. Let's bring on Peter Loving. Peter, welcome to Deal or Bust.
Hey there. How you doing?
Very good. So you are consulting with a lot of SaaS companies and you're helping them with UI, UX. Wes touched a little bit on UI, UX, but start off with what you think Javier is doing well. What's something that you're going, wow, this is incredible?
I'm amazed by how people are finding the product, and actually the conversion rate's good, as Wes mentioned, but I'm really surprised at the revenue you're making and not knowing really the sources of how customers are finding you and prospects are finding you. So that's almost, well, it's obviously a good problem to have, but I'd be really digging into that. So yeah, that's a really great start.
And so, Peter, now then jump into the recommendation. We're seeing here on the screen Ahrefs data. There's a clear content play here. He's ranking in third position for the keywords Twitter follower tracker. It's bringing in 284 clicks per month. A lot of these are converting, obviously, into leads. But from a UI UX perspective, what was the first change that you would make if you were running this company?
Yeah. I would really, if we jump over to the home page, I'm going to touch on some things that have already been discussed, but I want to just highlight things that I think might have been not elaborated on enough. So your key conversion tactic here on your website is getting people to put in a hashtag or a mention or keyword into this search bar, right? So I think that can be redesigned and just made so much more prominent and so much more clear about what it does, right? Because at the moment you've got about 5 or 6 different text styles, different font sizes and colors. What I find also super distracting is the huge background image on the right. Okay, so what you're actually doing there is having a lot of cognitive mess on the page, so it's just kind of distracting. So I would really think about cleaning this up, mostly just cleaning it up. I also think that the branding's a bit off too. So the style of the design almost looks like it's kind of coming from somebody who's a graphic designer, and they're using some stylish techniques that don't really work well here on this page for the web. So my first place to take a look would be saying, hey, great, you've got 1/3 of people trying out this, and that's because it's a really easy thing to test and people are curious, right? They'll put in hashtags that they use or their own handle or something. But I think you could increase that. If you redesigned this, I think you can increase it. You've also got kind of two logos there. So I just lose one of those logos, get a real clear call to action for filling this out. So I don't want to labor the point on this one, but that's the first thing. I'd look at reskinning this page, just restyling the whole thing. I'd redesign that. And then I'd go straight into the product. It strikes me that you probably have quite a technical team. Is that right, Javier?
Javier, how many are on the team today?
3 technical people and then marketing and me. 6
Right.
people.
Okay. Yeah. So it's missing the love from a good product designer and a good product manager, and I think those 2 people could make a huge impact on your business. After that, I'd start thinking about sales, because what a good product manager is going to do is they're going to get really detailed about your customers' ideal outcomes, and they're also going to get really focused on the user profiles. So at the moment you have agency owners, brands, and small businesses that you perceive to be the 3 main users.
Yeah,
Something like that. So what I'd be really curious from a product point of view is finding out their ideal outcome, and then really working on the product to make sure it aligns with that. So just like Wes was saying, getting that value to them in the free version of your report, but then finding out how you can develop the product further to align their ideal outcome with what your product's actually doing. So,
Javier, any feedback or questions for Peter?
I can't believe this is free. I mean, seriously.
Hey,
So
good.
thank you.
Can we have a look inside the product right now? Do you have a logged in version right now?
So Peter, we need to move forward actually, because the buyers here, I want to give them time to negotiate back and forth, but we can talk more about that. I'll connect you guys offline. In the meantime, though, if people want to follow up with you and join what you're building, where's the best place for them to find you?
Useractive.io. So useractive.io is my consultancy where we consult on product and design.
Useractive.io. And guys, he's building a great Facebook group at SaaS Founders and Execs with 7,300 members. I encourage you to check that out as well. Peter, thank you for coming on Deal or Bust.
Thank you very much, Peter. Thank you.
See how yeah.
All right. Javier, feedback is always tough. Before we go over to the buyers and see what they're thinking in terms of an offer, any feedback, like what was your biggest takeaway there? One thing that you said, you know what, I heard them both. This is the one thing I want to go try.
Well, design. And one of the things that I was prouder of, or the most proud, is our upgrade labels in the website. And now Wes is saying that it's not good enough. So I don't think people are getting the value of Tweetbinder at first. And that's something that we have to look at.
Mm-hmm. Yeah, Very good. Guys, if you're just joining, again, you are watching Deal or Bust. We're here with Tweetbinder. Javier's built a great business. He's hustled his way last year to over $388,000 in sales. This year so far, through halfway through June, did about $223,000 US dollars in revenue. Has these sort of three revenue streams: online sales, true recurring revenue, the MRR and annual renewals here on the screen, and then other revenue, which is more like consulting sort of revenue. We've got two buyers interested. Let's bring them back on the show. But first, real quick, guys, those of you watching in the audience, what do you think so far? Should do you like the business? Is it something that you would use for your own hashtag tracking, your own events, or your own company? Leave your comment in the chat. We'll be sure to bring you on. Javier, you have a lot of great fans in the audience. Amy B is saying, Amy's saying Javier is great, listens. He's not I would be defensive as hell if I'd be like, Wes, I love this feedback, but I'm so busy, dude. Or I'd be like, Peter, I know I want to do all this, but I only have 3 people. Come on, dude. But you were great, and you were great. So very good, guys. What do you think about? Okay, yeah, everyone's saying great advice from Peter. We're rooting for Javi. So Javi, let's bring the buyers back on here. Akil, Andrew, you guys there?
Yep.
Yeah, still here.
All right, great. So let's talk about something we haven't talked about yet, which is profits. So Javier, let's talk 2019. Were there any profits here?
Yeah, well, that was one of the reasons we are here actually, is because we are profitable right now. We are the profit is around 4,000, 5,000 euros per month, depends on the month. We are hitting more than 30,000 euros per month in revenue. In July too, this July has been awesome. It's been incredible, and we are profitable right now. And the thing is, I think we can do it much better, and we have to find the right partner to help us. So the profit here will be 50,000 per year, more or less.
Mm-hmm. And describe sort of, no founder is ever looking to sell, right? You're loving what you're doing. You're building a great company, but you're also opportunistic. You're always open, right? So describe what the perfect offer might sound like, because we're about to hear from Andrew and Akil and see where their heads are at.
Well, first of all, my intention was not to sell. Back 2 months ago, then I met the website MicroAcquire. Andrew actually is here, and this is totally from my heart. It's totally right. MicroAcquire is great. We got 30 potential buyers interested on making offers, and then I started to think of selling the company. So what I was looking was a partner to help us grow. I was not really thinking about buying the company. So the perfect offer for me right now will be a person who buys part of the company and help us grow and really grow. We've been offered a lot of things during these months, but I don't want somebody that is going to spend all the money that we have in the bank in Google AdWords or Facebook ads, and then is going to say, okay, goodbye. No, I mean, we have a lot of potential, and I want somebody that buys part of the company and then help us grow.
Well, Akil, Andrew, Javier, this is your show now. We've got about 10 minutes before Javier makes a decision. If you guys do choose to make offers, you can use it. Akil, we'll go to you first. Any last questions you have that really will help you formulate an offer?
Just more kind of summarize my thinking. If I would say what needs to happen at this point is just really simplify and focus. I think your churn is kind of scaring me away. That 19% a month is pretty high. I think you have too many products for too many users. So I'll try to see how we can define that to where the real, maybe segment your churn users and then see who are the high churn users and focus on the ones who are sticking around for the long term is my thinking right now.
Mm-hmm. Akil, do you care about profits right now?
Not necessarily. Break even, profit is fine.
Okay, so
as long as you're not burning cash. Yeah. Before
I sort of make you, say you're in or you're out, and if you're in, sort of make an offer, how do you value a company like this? This is very difficult. I know we chatted before. I know you chatted with our team, Javier. We kind of made an informal offer already. I like the idea of partnering. I don't think you're at the best point right now to sell. There's a lot of opportunity that we see, and I'm sure you see as well. We'd love to work with you and make it work. I think the focus is on those enterprise value. Look at the revenue. I think that's the best thing at this point. I can't look at profits because there's a lot going on here. Andrew, over to you. What last questions do you have before saying, you know what, I'm out because of X, or I'm in and here's my offer?
Yeah, I guess, Javier, number one, would you be willing to stay in the business full time, handling the tech side of things? And then I guess the secondary question is, maybe a piece of feedback too. I feel like you're running two businesses. You have a business where you're just giving reports to everyone on Twitter. Then you have these high value accounts. And I think that's where the growth really needs to be unlocked. So would that strategy be appealing to you? And would you stay in the business if someone came in and helped you formulate that sort of revenue strategy?
Yeah, for sure. I was a good CEO for the guerrilla times, when you have to survive. Right now, I don't know how to scale. So I know that I want to stay in the business. I would love to do that. I come to work every day like so happy. And if someone like wants to grow this and get the power of Tweetbinder, that would be okay for me. I'm open to anything as long as Tweetbinder grows.
Yep. All right, Andrew, any other questions before we get into offer mode?
I think I'm good.
All right, guys, those of you watching, before we go back to Akil and Andrew and let them sort of discuss real offers here with Javier, or drop out if they can't work it out, if you want to support Javier, you want to root him on, you love the product, I'm putting a link right now in the comments. This is on Twitter. We have featured Javier in a tweet with this live feed. Just go there real quick, click the link. If you're on YouTube, I just put it in the chat. If you're on Facebook, Periscope, it's in the chat. Go there and leave a reply on that tweet and then retweet it to support and show your support for Javier as he starts working through what a potential deal could look like with Andrew and Akil. So Akil, let's go to you first. You mentioned that, again, your team is familiar with Tweetbinder. You mentioned you made an informal offer. Has anything you heard today changed that offer? And if not, what is the offer?
Well, it's interesting to hear from his perspective. I didn't realize what you were looking for in terms of the partial purchase and then helping them grow. I don't think much has changed, to be honest. I think it's still kind of the same message of what we're seeing and what we've talked about in the past.
Okay, and what was that offer?
So I think I got to clarify with my team, but I think we're deciding to come on. I think there needs to be kind of a better structure for a CEO role focused on product and marketing and kind of clarifying the focus of the vision of the company. And then from there, we would help you maybe acquire it at a later stage when we hit some kind of milestones.
Mm-hmm. What would you do then today? Are you saying you would do like buy 10% today with an option to buy the rest later, or how would you structure a deal?
Yeah, something like that. We'd partial a very small. Actually, we wouldn't buy anything right now, to be honest. It's just too risky at this point. 19%. We'd have to validate that first, and then we can come in at a higher valuation. Happy to pay $1 million. I think is kind of a number you were looking at, and I know we wouldn't pay that now, and anything below that, we wouldn't want to insult you. I guess is kind of the issue there.
Javier, why is $1 million your number?
To be honest, I don't. I have many numbers. I've been offered 700,000. I've been offered like 300,000. I've been offered a lot of things. One of talking about the conversation I had with the team of Akil, it's great that he's here. What they offered, it was appealing to me. I mean, it was locking a price now for the future and work with them. If that's something that I have on my table, and in September I will get all the things that I got, offers and everything, and I will take a decision. But the work that I did with the team of Akil during the first days of July was awesome, and I think that team can do great things. Mm-hmm.
Well, you have someone else that's interested in Andrew. He's very familiar with the business because you listed on MicroAcquire recently. Andrew, where's your head at? You heard how Akil's thinking about it.
Yeah, I'm probably thinking something similar, Javier. I think what you need is a growth partner. You need someone that can come in, optimize your conversion rates, implement a sales strategy. What I'm really excited about is you have these high-paying customers and you have no idea how you got them. And if we could just figure out together, number one, why are they getting so much value? Why are they paying that much money? And then how do we get 10, 20, 30, 40 more of those? Your company's going to be worth like 10 times what it is today. So my offer would be something similar where I'd put, some cash into the company for us to. Is it offer time, Nathan, or not?
Yeah, go for it.
All right. Javier, I was thinking maybe something around. I would put 100K into the company, and the goal of that would be I would come with it. So my sales, marketing expertise, and then we would look to bring in someone to just optimize your conversion rates. And then I would put focus on, number one, just diving deep on your ICP. Who are these people paying a bunch of money? And helping you build out the white label strategy so you can go get more of these agencies to pay you a lot more in revenue. Because I think you don't have a churn problem. I think you were just selling to the wrong customer that just churns because they try once and it's not valuable. So we need to section off, find out who is getting the most value, and just sell more to those customers. So that's the approach I would take. In terms of the equity split, I'm open to hearing your thoughts on that. But again, this is all just like napkin notes right now. But that's where my head is at.
Okay. I mean, it's so good that you are interested, Andrew. To be honest, this is something that we can. This is something I am interested, and this is something that we can discuss later because there are like many details.
No, Javier, discuss it now. So, how much of the company would you give up for $100 grand?
Less than 10%. Less than 10%. That's for sure. But I want to know. You said, Andrew, that you are going to put those $100 US into the company. So what are you going to use that money for?
So ideally, we would work on that together. We would partner. So you have 4K in profit today. That's monthly. So I'm assuming, with this injection of capital, that would be enough to hire an additional person like a marketer. I would come in. I would nail down your sales process. I would help you recruit this person as well to make sure that, they're a person that can actually get the things that we need done. Lots of details to work out, but the general idea would be the 100K, we would decide how do we use this to grow the company. And I'd advise you on how I would grow the company in terms of increasing the LTV of your current customers so you can go up market and get more of these high paying customers. Does that make sense?
Yeah. And how much time would you dedicate per week to Tweetbinder?
I mean, at 10%, I'd probably, if you wanted me, let's say, full time on this, I'd need a little bit more on that. But I'm open to negotiating. I love your business, Javier. I think you were sitting on a gold mine. I truly do.
Oh, thank you. No, that's great. My fear is that I don't know. I'm talking Akil or Andrew. Like Andrew, you don't dedicate enough time to grow Tweetbinder. Tweetbinder is a business that is very easy to run, but to really understand, you have to spend like 1 month into the company, like to understand like the limit of tweets, how the Twitter API works, how we work, why people are canceling. I have no idea why people are canceling in Twitter, all these things. So I will need like a commitment of time. This is something that I'm interested. I don't know if the percentage will be like more than 10%. I don't want to give more, but I will require more of your time, Andrew.
Before Andrew, I get your response to that, Akil, are you going to throw out like hard number sort of offer here, or are you out? Where's your head at?
I think at $1 million pre-value, I wouldn't pay that amount at this point. But we can give you more time, and I think that's what we talked about. Is we can kind of come in on consulting, have somebody kind of full time. We need time to understand the business. We realize that this is complex. There's a lot going on. Once we do, then we're happy to pay more at that point. But at this point, I think I think Andrew has a better number than I can offer.
All right, Akil, thanks for coming on, man. So Andrew, look, this is like the tough question, right? Like you built the company over $10 million in sales. You sold it. You can do whatever the heck you want. You probably drive a Tesla. Why? It's not.
I don't drive a Tesla.
Okay, good. It's not. You have all these opportunities coming out. You just were the CRO at Spiff and helped them raise a lot of money at a pretty $10 million at a really good valuation as CRO. Javier obviously wants you involved, but you have to be thinking, well, if I only get 10% and I grow it to X, is it the best use of my time? So how do you think about that?
Yeah, I mean, Javier, I do believe, your business it has a lot of opportunity in it, but my time is probably more valuable than the capital I could put into the business. So at 100K for 10%, I don't know if I could do that. But I would love to talk about this online. I know this is like a situation where it's like, do you have to decide? I'm not that type of person. You know, obviously to really make this work, we got to like shake hands virtually and hug it out and say, hey, this is going to work together. Because you got to, you know, deal with me if we do a deal. So I guess, you know, I was thinking around like 20%, but happy to take it offline, chat with you, go through a little bit more in depth of what I would bring to the table in terms of time, and we can negotiate a little bit more. But that's kind of where my head's at. And just to clarify again, time to me is more valuable than the capital I have.
Mm-hmm. Well, I have to think. To be honest, I am interested in this offer. Okay, I'm interested.
Javier, hold on. What offer are you interested in? 100 grand for what percent?
Between 10 to 20%. That's something that if it comes with a commitment of time and to see what the person is going to be like and who is going to be and what are the actions that Andrew wants to do or the person he's bringing, that's something that can be interesting because I need this to grow. And also, I would like to review more like what Andrew did in other companies to see if he can really grow this. I think so, but just to check.
All right, guys, those of you watching again, this is the beauty of a live show. Prem Sant, Roberto Moreno, Change the Way, Martin Singh, all of you guys in the comments, what do you think? Is this going to end up in an offer? You know, should Javier reward Andrew and say, you know what, here's 100 grand for 20%, I'll take that deal. But the thing I always ask, and I would ask the same question to you guys, is somebody like Andrew that's done so much, you know, they've put in 20 years of their life so that they can have a massive impact on your business in a minute. Not to say I'm going to commit, you know, 3 days a week to the business. In other words, you're paying for the experience they have versus like an amount of time. So what do you guys think? Do you think if Javier accepts a deal of 10% for 100 grand, do you think Javier is getting a better deal there or Andrew's getting a better deal there? While you guys are commenting, again, I'll go back to Andrew. So Andrew, you're kind of saying, listen, it really needs to be closer to 20% for 100 grand. You know, Javier is saying, I want a time commitment and understand what you're going to do. I mean, how do you bridge this gap?
Yeah, I hear what you're saying, 100%, Javier. I mean, you got to understand when I put capital in, I want to see, you know, return on that. So my thinking is here, you know, with this 100K, I would help you allocate it in the business how I would. The people I would hire with also my expertise on, you know, sales process, going up market to get more of those high paying customers that you have. But yeah, I mean, I understand what you're saying on equity, but the idea here would be let's grow the hell out of this thing and then let's take it to market together so you can get a higher liquidity event once we actually get this growth in place, churn under control, understanding who the customer is that gets the most value out of your product, you know, improve conversion rate optimizations, launch the white label program. These are all things I have done. So that's where my head's at. I'd probably be at 20%, but again, you know, Javier, I've enjoyed getting to know you over our previous calls. I think you are an awesome person and you have an amazing company. So I'm not the type of person to put pressure on you right now. So, you know, happy to take this offline, but
this is YouTube Live. It's a pressure show. The offer is 100 grand for 20% of the company. Javier, you have like 10 seconds to think about this while I promote next week. Guys, if you're loving the show, next week we've got a great company on. It's an e-commerce play plus B2B SaaS, a pricing tracking tool. They're doing $155,000 a month in revenue. It's hugely profitable. So about, again, $2 million in ARR. We've got a whole new set of buyers, a whole new group of experts. Make sure you don't miss that episode. Go to nathanlatka.com/next week to add it to your calendar right now. Javier, what are you going to do? It's decision time. 100 grand for 20% of the company.
I will not accept that. I'm sorry. I understand everything, and that's very good. But at this point, right now, no. But I would like, if that's okay, to open the door to the same offer. Let's talk again in September when the summer passes. But I would say no. right now.
Andrew, thanks for coming on, man. I'll let you guys take it offline.
Cheers. Javier, let's connect
Thank
again.
you.
You have my email.
Thank you very much, Andrew. Thank you very much.
Javier, dude, what are you thinking? This dude's Andrew. You really wouldn't sell 20% for 100K to get someone like him on the team?
No, actually, I will need to talk to my team about it and not to make the decision right now, because I think the company is I don't know. For me, it's just too little.
Because just think about it, right? I mean, if he's putting in 100K, let's say you don't get any of his time, it's 100K for 20%. He's valuing the company there at 5x that, right? So he's valuing the company at 500K. When you really only have right now annually in terms of real recurring revenue, you have about 120 grand in ARR. Like true ARR. You have other cash businesses because of the online sales and the other consulting revenue, but he basically gave you like a 4x multiple on your true ARR. And he's saying he would give you your time, and you're sort of saying, you're just not interested right now.
That's correct. That's correct.
Fair enough. Like everyone's rooting for you. They love the tool. Thanks for coming on Deal or Bust, Javier.
Before I go, this is great. Thank you very much, Nathan.
You enjoyed the show?
Amazing. I was turned on by Neil Patel, for me it's like amazing, Well, thank you very much.
You bet, Javier. Guys, those of you watching, again, you just watched an episode of Deal or Bust. Coming up next week, we've got another great founder on. Subscribe below on YouTube to make sure you don't miss an episode, and click, actually an episode. That's more fun, right? Don't miss an episode. Click subscribe and the little bell icon to make sure you get notified when we go live next Thursday at 1 p.m. Central. Again, click the like button and engage. And remember, there are so many people watching the show, loving it, and they're going, Nathan, one of the things I'm doing now is I'm using Founder Path. And the question I'll leave you guys with is, why are so many SaaS founders taking money from this site? Guys, I am Nathan Latka. Again, you just watched Deal or Bust. Those of you in the comments, I want to thank all of you. Cameron Ellis, Will Cannon, Steve, Roberto. I'm glad you enjoyed it. Guys, on a scale of 0 to 10, 10 being you freaking love this thing. It's better than Shark Tank. It's software. It's micro acquisitions. You guys sitting at home can play along. You can make your own offers if you want. Do you love it? Should we do it again? Let me know in the comments. We feed off this stuff. And the more you guys engage with the episode, the more leverage I have to bring on new founders, new investors, and new experts. Special shout out to our experts today in Wes Bush and Peter Loving as well. Guys, thank you so much again for coming on. Calvin, Pink Flower, who else? Beauty Bubble, Brandon Seck, Roberto says 1,000%. Guys, again, I'm Nathan Latka. Thanks for watching another episode of Deal or Bust.